What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. Okay, so let's make a full breakdown of the situation that we currently have on EURJPY. Now, as usual, I will be keeping this analysis as educational as possible to show you guys exactly where we can be looking for the highest probability setup on this pair, and I will be first covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market, and anyway the non-commercials in the market, which are the biggest speculators, so the big institutions that are in the market to actually make money, and they don't have other kind of interests. Their only interest is actually to speculate and make money. And that is exactly the guys that you want to follow when it comes to a trading, because obviously you want to be on their same side. So at the end of the video, by using the combination of our technical and order flow analysis, we will be able to understand where we can be looking for the highest probability setups on this pair. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we can see that the market has just provided a nice impulse and correction. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that we have a 0.382 Fibonacci retracement, which is lining up exactly at this area. And if we look closely, we can see how actually this 0.382 is also lining up with this previous resistance, now turned support here, basically creating a confluence of support at this area that we definitely expected the market to test and reject to the upside, because if you have a confluence of support from that zone, you definitely expect the market to get rejected to the upside. So at the moment here in the monthly, everything is clear. The market is rejecting a very strong confluence of support zone. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see that at the moment the market is quite overextended to the upside. In fact, we can see how the market has just provided this overextended W formation. Now, generally speaking, after an overextended W formation, what you want to see is the market create a move to the downside to go and retrace at least to the 0.382 of the Fibonacci taken on the impulse leg. So in this case, from this low to this high. And we do expect the market, in this case, to provide a retracement at least to this zone. Why? Because as we have just said, this is the first retracement level at which you expect the market to create a move to after an overextended W formation. So here in the weekly, situation is quite clear. We expect a retracement to this zone before a possible continuation to the upside. Going down on the daily time frame, what do we see? Now here on the daily, I had spoken about EURJPY quite a few times in the past. I spoke about EURJPY after the market created this W formation here. I made a full breakdown explaining other reasons for which, from this level, we expected the market to provide this correction. And in fact, that is exactly what the market did. Then from here, I made another breakdown explaining other reasons for which we expected the market to provide this continuation to the upside. And again, that is exactly what the market did. Then we had the creation of this overextended W formation, and from this level I made another breakdown explaining all the reasons for which from here we expected the market to provide this move to the downside. And again, that is exactly what the market did. Then from here, I made another breakdown explaining all the reasons for which we wanted to see the market create this other continuation to the upside. And again, that is exactly what the market did. And after the creation of this overextended W formation when the market was here, with the very last breakdown, I explained all the reasons for which we could be looking for a nice move to the downside. And in fact, again, that is exactly what the market did. And by the way, I will link in description all this previous analysis. So you find all this previous analysis linked in the description, so you can go and check it out for further reference and more free education. Any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also, make sure that you smash that like button and subscribe. Now here on the daily, what we can see at the moment is that the market has just provided a nice impulse and correction. Now again, after an impulse and correction, if you want to measure the correction, you have to take your Fibonacci from the impulse. on the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has just retraced exactly to the 50% of the Fibonacci taken on this daily impulse, and currently the market has started this rejection to the upside. Now, why has the market retraced exactly to the 50%? Because this 50% was lining up with the previous resistance turned support, creating a confluence of support at this area that we did expect the market to test and start to reject to the upside, which is in fact exactly what the market did. So recapping what we have seen, on the monthly we are still rejecting quite strong support and we have very strong bullish momentum. On the weekly, we do expect a deeper correction, and on the daily we have a nice impulse, correction testing confluence of support, and we expect the continuation to the upside. So monthly and daily are quite bullish, but the weekly is actually bearish, which is not good for our overall bullish view that we have on the other two timeframes. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, we can see how with the last reports, on the euro, hedge funds have been decreasing their net positions. In fact, we went from having 140.2k net positions, slowly decreasing all the way down to 101.9k net positions. So quite a strong decrease of the net positioning, meaning that hedge funds are decreasing longs and increasing shorts. In fact, what we can see here is that we went from having 79.8k short positions, slowly increasing all the way up to 105.6k short positions, and longs got decreased with the last report from 222k to 207k long positions. In fact, we have 8.9k shorts added with the last report on the euro from an institutional perspective and 15k longs getting closed. So the euro is getting quite weak. And if we go and see what we have on the JPY, we can see, however, that on the JPY we're getting even weaker than what we have on the euro. In fact, we went from 50.5k to 6.5k net positions with overall 57k shorts at the moment, which is one of the highest levels that we had. We went from 13k to 57k, so more than doubled. Actually more than tripled. So it's been an incredibly increase of shorts on the JPY, and that is the reason for which EURJPY, even though the euro is weak, has been making a move to the upside, because the JPY is even weaker than the euro. So the question is, will the market manage to create a higher high? Or, since we are overextended on the weekly, as we have already seen, will the market manage to break below the zone? In both cases, there is an opportunity, because at the moment, until the market will remain above this support, we can be looking for a potential long. But if the market will then break below this support, at that point, we will have the creation of this M pattern, so we can first be looking for a long and then for a short. But at the moment, since we are still above this support, let me just show you how we will be approaching this specific situation with students. Now, until the market will remain above this previous resistance turn support, what we will be doing with students is monitoring price action from a 4-hour perspective. Now, why 4 hours? Because monthly, weekly, and daily combined with the COT data are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So with students, what we will be doing is monitoring price action from a 4-hour perspective, waiting for the market to shift from a 4-hour bearish market as we have right now to a 4-hour bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point, we will be adding EURJPY to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside and create a higher high. On the other side, if the market here will remain bearish as it is right now, this market will easily continue to the downside. And if this market will easily continue to the downside, obviously we're not interested for any longs. So at the moment, we are still not looking for any kind of longing opportunity because everything on the 4-hour is still bearish. We don't even have it on our watch list. But if from an intraday perspective, the market will shift from a bearish to a bullish market, we will definitely be looking for a potential longing opportunity with students. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.